Hey guys, welcome back to the channel. Today I want to give you guys 6 stocks that I'm going to be highly buying, or at least adding to the watch list and preparing to buy here in March. So these should be 5 stocks that you guys should put on your watch list. I'm not saying you have to go buy these right now, but these are ones that are getting into really nice buying opportunities or are already in great buying opportunities, at least in my opinion. As always, this is just the stocks that I'm looking at right now. These aren't must-buy stocks for everyone. Not everyone is in the same financial position, but as always, if you need further investment advice, go to a financial advisor, not a guy on YouTube. Okay, anyways, let's get into number 1 of 6. We're going to be going over stocks that are a little bit more speculative, as well as the big cap stocks that are safer for long-term investing that have just a nice buying opportunity. The charting system I'm going to be using is Webull today. If you guys like the charting system and want to give it a try, I have the link down below for 4 stocks, I believe, if you deposit $100. But that's just a way you could support the channel. Other than that, just leaving a like is all I ask for you. So thank you very much. Now let's get into number 1. All right, so the first stock we're going to be talking about is definitely the riskiest stock out of all of these. So if you have a very low risk tolerance, this might not be the one for you, but this is one with incredible upside. This is ISUN. Okay, so they just got acquired by Pet Company, and they have dropped drastically over the past month. We could see they went from $6 all the way up to $30 and then back down. So they are a big player in the EV charging market, as well as just solar in general, and it is down to $13.70. Okay, but it's finding a nice base here at the $13 mark, and this is where I could see it bounce back up to, I would say, low 20s, probably 20 to 25. If it does hit around $20, as I expect, that's a 50% gain from where we're sitting at right now. So it's one of those speculative plays, and this is definitely the riskiest play here. But for all of you guys that don't know what they do, we're going to go over a little bit of the basics of this business. So the deal that they just had was Pet Companies, which was under the ticker symbol PEC, acquired ISUN Energy. Okay, the main thing that can take this stock off is the electric vehicle charging ports that they have. They also have energy and mobility hubs. These are simply just, solar paneled buildings with a plug up. So they are a full service energy solutions provider. As for financial highlights, they actually do have a backlog of over $60 million, and they're only sitting at a market cap of around $80 million. And another thing that is great about this is another short opportunity. If we look at this website here, this is all of the high short interest stocks, and obviously top, GameStop, Tanger, those two. But if we go down to number 16, we could see ISUN right here. Okay, it has a short ratio of nearly 30%, and its outstanding shares is only 5.81 million. So you could see this thing soaring very, very fast. And in a smaller float environment stock, this is definitely a stock that could take off over the next month, hopefully. But yes, guys, this is definitely my most risky stock here on this one. But we're going to move on to number 2, which is a larger cap stock, and it's Shopify. Everyone knows what Shopify is, but over the run of February, they did a absolute massive tear all the way up to $14.74 at one point. That led us with a great about 30% upside, but it has since crashed 15 of that percent and given up some of its earnings. However, this one still presents a really nice upside potential with a forward PE of 322 and estimated earnings growth over the next 5 years of around 40%. You could see that there's a lot of upside here. This is a earnings play. At the moment, Shopify is testing its 50-day moving average, which is this blue line right here. This 50-day moving average usually does seem to be a pretty nice resistance for it. Now, obviously, it breaks it and whatnot, but for the most part, it kind of follows this 50 MA very, very strongly. And I could see it bouncing off this 50 MA and moving on back up towards its all-time highs of $1,500. This is a long-term play, though. This isn't going to be a quick flip for 50% like the other stock, but we could see an upside in short term, potentially of around 10-20%, depending on how high it goes before the next pullback. But with a market cap of $159 billion, this is a company in the future that I could see doubling and tripling over the next decade. Definitely a long-term play for me, and with average 1-year targets of 1,400, we could see a huge, massive upside of 20% in this year, which is always a good thing whenever you're talking about a safe, large cap stock like Shopify. Now, the next stock I want to share with you guys is this one that I'm going to be adding to a dividend portfolio pretty heavily at. This is Pfizer. It's sitting at only a 19.6 PE ratio, and we all know that Pfizer is about to just, be packing in money with this whole virus thing. So I do not understand why this thing has dipped so far in the past few months. It's gone from $62 or $42 all the way down to $33, and it presents a very nice PE and a very, very nice forward PE. If we look at the forward PE, the forward P right now on this thing is a whopping 10, okay? A 10 forward P, absolutely dirt cheap. And it's also sitting at a 5% yield, almost 4.66%, with potentials to go back up to its all-time highs really, really soon. Honestly, I think $40 to $45 is very, very possible here soon. Now, maybe it might not hit the actual all-time highs. Looking back early into the early 2000s term highs, we could see this thing pulling up. The RSI indicators means that this is very oversold. You guys could see that right there. And I could see this thing short term, as in the next month, I could see this thing going up to 36 to 38, and that would provide us with around 10% upside as long as this market doesn't keep crumbling down. If that happens, then everything's going to fall, and that's just, everyone knows that. But with Pfizer, not only over the year, I see this thing going into the 40s again. That would present us with 20% upside, but additionally, we also are going to get our 4.66% yield. So if I had one stock that I could put my money into my dividend account right now, it would be Pfizer. A few months ago, it was Walgreens when I bought that thing at 33, and since then that thing has taken off. So this is a similar play in my opinion there. I was buying Walgreens all up in this area right here, and it has paid off drastically. And honestly, I think Pfizer's in that oversold position right about now, and I think we'll look back at this thing in 4 or 5 months and see that it consolidating up in the 40 range, and we could decide if we want to keep on to it or sell it there. But for now, I can only see upside in this thing at a 10 forward P plus the vaccinations coming out hot. The next one I have for you guys is Smile Direct Club. This is another stock that is highly shorted right now. Compared to ISUN, what was sitting at 16, Smile Direct is sitting at the 20th most shorted stock, and its short interest is sitting around 26.23%. This one has a much larger float, but Smile Direct Club is a company that's actually established and is fairly popular within the marketplace. As for revenue numbers, though, this is one that is actually very attractive on that stance. Obviously, the company doesn't make money yet. However, their revenues before COVID were growing drastically. People, of course, have lessened their spending on things they don't really need. Smile Direct Club offers cheaper access to a good smile. It's basically an alternative to a dentist, or I guess a orthodontist. And they have a very unique value proposition. They are in a lot of stores, right, already. 3,800 Walmart stores, 3,000 CVS stores, and their Q4 earnings will be on March 4th, so this upcoming week. But if we just look through the news report, even the past 15 days, okay? Over that past 10 days, though, they have now announced a partnership with Walgreens, and they will be over 10,000 stores total between Walmart, Walgreens, CVS, so 10,000 retail stores across the globe. They also made a partnership with National Dental, and they will be growing into the Netherlands. So this is one of those growth stocks that, yes, it's highly shorted, but this one doesn't make much sense for why it's so shorted. If we look at its price right now, it is bouncing off of this 120-day moving average. It seems like a lot of buyers step in, at least over the past since around August. This has been a very, very strong resistance here, or support rather, the 120-day moving average. If you guys see this red line right here, it bounces off this like clockwork, and right now we are consolidating on the 120-day, so we could potentially see a bounce back up into a new all-time high formation. And I could see, you know, up to $15 probably short term, and this is dependent on how this earnings report looks here in March, but long term we can get this thing to $15. That's around 30%, and I can see that happening at least in the next year, which 30% in a year, it's nothing to write home about, but it is a great return on your investment on a company that I do think is really innovative in the whole dental industry. I got two more for you. We're gonna go over these ones a little faster because we all know what these companies are. This one is Alibaba. I started buying this thing once this over dramatic drop happened last month, I believe it was. I got in at a stupid price. Like, I got in on the lowest wick. It was like 218 or something. It was insane, and I rode the wave all the way back up, but it has come down again, and it is sitting at such low levels. It does not make any sense to me. The PE ratio for Alibaba is sitting at 25, but its forward P is sitting at a solid, yes, it's sitting at 20.79, and this thing is going to grow another 30% this next year. So this is a company that I think should be trading in valuations of around 60 to 80. If we were to compare it to like Amazon stock trades at around 60, 70. Alibaba really owns a marketplace just like how Amazon does, and I think that their growth rate is incredible. If we were to look at analyst price projections here, the consensus price is $323 price target, and this is across 28 analysts, including all of the big ones, Citigroup, all the big guys. These are all of the ones right here, and this is their price targets on the side. But to put it simply, we are trading at marks or levels that we were trading at in July, and since then this company has exploded every single quarter. They break earnings records every single quarter, and I'm almost sure that this company will eventually be a $1 trillion company, and it is sitting at $640 billion. So this is a long-term growth play, and it's becoming very oversold. We could see a few more red days, but overall, even if you bought it now, you're still going to be green in the long term, and I can almost guarantee that. Now, this last one is one that I talk about a lot on this channel. I've been calling it for months now. The first ever call I had was back in this January dip when I got in at 215, 216, a few cost bases around there. And I rode this wave up. I sold it around 230, 240. Once I made 10%, I think was the gain on it. And then it has dropped back down to 216. I think this is such a stupid low price for Salesforce. They are sitting at a 70 forward PE, 64 trailing P, but they just acquired Slack and that thing tore them down. But I think this stock belongs in the 280 to 300 range, especially with its growth rate over the next few years, 18% next year. I think over the next 5 years, it's estimated around 18% over the next 5 years. But this thing is presenting us with a really good buying opportunity anywhere within my square here from 215 to 213. This big red wick is from their earnings report. It wasn't as bad as I thought people over dramatized it to be. Like, I don't think it was bad enough to send the stock down 10%, but Wall Street is always over dramatic. This is when we eat, though. We always eat whenever everyone else is freaking out. Even if this thing is just a good swing trade opportunity, I think it'll get back up to at least these levels, which would present us with a pretty nice upside even by itself, 15%. But we'll see. This could be a swing trade. This could be a long trade. Either or, I think it's a buy right now in these ranges. Obviously, you determine for yourself if you want to swing trade a stock or hold it long or whatever you want to do with your stocks. All I'm trying to do is just give you guys stocks that are in really good buying opportunities right now that are discounted. I didn't include any of the EV stocks because I have a video yesterday. If you guys want to watch that one, yesterday I talked about the EV stocks and how a few of them, I feel like they're going to shoot up, but I did not include that for March because I don't think they're going to be buys for the entire March, and I think these ones will. So hopefully you enjoyed my 6 stocks to buy in March of 2021. If this helps you, I'll do this every single month from here on forward. So if you're looking forward to that and other stock related things, please do subscribe, turn notifications on, and you'll get stock updates every single day. I try to post twice a day, but sometimes, especially weekends, I only do one. But thanks for watching. Have a great rest of your day. Bye-bye.